and you are Michael Kennedy. And
Hmm.
would you like to tell me, give me a little bio first about you?
Sure. I've been doing reverse mortgages full time for 50 years in this area of the country. Uh, Born and raised in this area, grew up from the area, and we never lived here and we were married. Wound up in Colorado for a long time, and I, after going through a couple of false starts, I wound up flying Boeing 720s for Eastern Airlines for a long time, and it was an experience. Fortunately, back in that time frame when the airline deregulated, there were half a dozen of the majors flew into the ground. That was one of them, and at that point, uh, it was time. I was close enough to the retirement age that I did. That we decided to move back to Rhode Island. My wife and I both still family. We moved back and had an opportunity to get into the reverse mortgage business. That was back in 2005. Reverse was becoming a little bit more common, and at that time, Wells Fargo was far the biggest originator of reverse mortgages. There was a small company on the coast, and that was it. And that went on about 4 years. In that time, Bank of America got into the business, MetLife got into the business, and in this part of the country anyway, almost a little bank on the corner was offering reverse mortgages. A year or two, they realized it wasn't as easy as it was going to be. So the bigger ones got out of the business, opened up an opportunity for smaller companies specialized in reverse mortgages. And they came in, and one of the first things that they did was they cut closing costs. Almost invariably, competition and benefit. And so the closing costs, well, they were out of whack before. They got to be much reasonable. In the meantime, reverse mortgages have become more common, a little more better known, a little respectable. The company that I work for, East Coast Capital Corporation, we're headquartered down on Long Island. We are licensed in all 50 states. I'm licensed in Massachusetts, Connecticut, Island, and this is all that I do. I enjoy it. I feel providing a valuable service that is the same service that you folks are doing differently, that seniors to stay in their homes, and you enable them to remain independent. We enable them to be able to afford your services, and that's, and again, for 15 years, and everyone, maybe a couple more years be enough. I'm still enjoying it. I feel like we're doing a good job and we're helping folks, so I'm happy to be here. And again, I've known Leah for about all of those 15 years, and we've kept in touch. Still doing the same thing, and helping folks remain in their homes over the long term.
That's great. That's our goal too.
Mm-hmm.
Well, tell me, what is a reverse mortgage?
A reverse mortgage is simply a home equity loan that the customer never makes payments on. And when I introduce it like that, oftentimes I see the eyes start to squint a little bit. But I explain that it's a government-sponsored, government-insured program designed to help seniors stay in their home. And we have a formula that's applied to us by HUD that we apply to every potential reverse mortgage customer to tell them how much they qualify for. The money that they qualify for is tax-free because it's not income, it's their money coming back to them. It can be used for absolutely any purpose whatsoever, whether it's paying off an existing mortgage or a home equity line of credit, for the services of a company so that they're going to be able to remain independent, stay in their homes, or anything else that they choose to do. The reverse mortgage is an open-ended note. It does not have a term. We tend to think of a 20-year mortgage or a 30-year mortgage. With a reverse mortgage, there is no term because it's designed to help the seniors stay in their homes as long as they want to or as long as they can. Go ahead.
And who is eligible?
Any owner who is 62 or older. This program is, again, government sponsored, government insured, designed to help seniors to stay in their homes. Almost 100% of my business comes from referrals from professionals like yourselves or elder law attorneys, people who are also serving seniors. And when I'm referring to someone, the first few questions I ask them are their age and is this their primary residence? If that's the case, then we do a little bit of math. Reverse mortgages are designed by the government to be very conservative. We never approach 100% loan to value. In fact, I helped a 98-year-old widow a couple of years ago, and her situation was like so many seniors. Her expenses were going up faster than her income was, and we applied the form to her, and she had qualified for almost 80% of her equity. And that's the highest one that I've ever seen. So it's on a sliding scale. The older the customer is, the higher the percentage of their equity they qualify for. So starting at about 50% for someone who's 62, the minimum age, up to the 98-year-old was approaching 80%.
You answered my next question, which was basically how much someone could receive from that.
Mm-hmm.
So it does vary quite a bit based on a lot of factors then.
Mm-hmm.
What are some of the benefits of a reverse mortgage?
The biggest single benefit is that it enables the senior to stay in their homes. And, I'll speak for myself being a senior citizen. Human nature is resistant to change. As we get older, we become more resistant to change. And so that every single reverse mortgage that I've done in 15 years, one of the things they had in common was, I want to stay in my house. I'm not sure I'm going to be able to afford to. I'm not sure I'm going to be able to do it because it's not senior friendly. But that's our objective. And so then we help them to raise some tax-free cash to be used for any of those purposes.
So including modifications to their home so they can
Absolutely.
still remain there.
Yep.
Yeah, that's great. Now, what are the tax-free distribution options?
The way that it works with the reverse mortgage, the formula supplied to us by HUD gives them a figure, and that's the amount of money that is available to them. They can take a lump sum, a chunk of money out. For instance, if you have any existing lien, a mortgage, a home equity line of credit, that sort of thing, the first thing that we do is pay that off. What that does for the customer is eliminates that monthly mortgage payment. I've had a number of people just say, well, geez, Mike, I'm not making $1,200 mortgage payments anymore. I'm going to be able to afford retirement, or what are the things that they told me they want to do. They also have the option of having a monthly draw. Whatever money for example, a customer might qualify for $100,000, and the first $30,000 is going to go pay off that mortgage, the home equity credit. They now have $70,000 that they qualify for, and they might take another $20,000, for example, to do some repairs or things that they've been putting off, leaving them $50,000. Well, that $50,000 automatically goes into a line of credit and remains there, and is simply by calling customer service. When they call customer service, when they call in, caller ID puts all of their information on the screen of the customer service rep who's taking their call, and they tell the customer service rep, we need $5,000. The only question the customer service rep asks them, and they say, at closing, we got the information to show that you bank at Citizens. Is that where you want the money direct deposit? If the answer is yes, or if no, we change banks, we'll get the customer service department new banking information, and they're guaranteed by, and this is the law, when they make a request, that money has to be in their or check in the mail within 5 days.
What kind of costs are involved? I know with a mortgage, you generally do have some costs involved.
Yes, well, there are two kinds of costs. The first one, the cost out of pocket that the customer has to pay up front. And there are two costs there. Everyone who wants to make application for a reverse mortgage has to attend a HUD approved counseling session. And most of my customers do it over the phone just to make it more convenient. But there is a cost of $125 for the counseling session. And that has to be paid on. If they're very low income, then the counseling agency has the option to waive that. But I always, the $125 for counseling, and the other cost out of it is for the appraisal. We have to get a current appraisal naturally, so we know what we have to work with. In this part of the country, single-family residence, the appraisal fee is about $550. So you look at the better part of $700 to get the process started. Then there are closing costs that one of them, there are three parts to the closing costs. The customer doesn't write a check. They come out of the proceeds of the reverse mortgage. But the first one is every single reverse mortgage, I'm using industry buzzword or jargon, HECM, Home Equity Conversion Mortgage, which is the variety reverse mortgage. It's the far and away the most popular, most attractive, but it's because it's a negative amortization loan. That is, interest accrues but is not being collected. That every month reverse mortgage balance rises just by a little bit, but if it goes on for a long time, that's possible. That when they pass on or move on, that if also a terrible real estate market like around 2008, it's possible that the reverse mortgage balance could be more than what the house sold for. Doesn't happen very often, but just because it can, the regulators say, we want this reverse mortgage customers to be protected. So there is a private mortgage insurance policy on every single home equity conversion mortgage. And when people hear private mortgage, oh, I have to send a check for $40 a month. No, with the reverse mortgage, we're trying to get you out of the business of writing and sending checks. So the private mortgage insurance is a single premium insurance policy that is put in place at the time of the closing, and it's good forever. As long as you live in the house, as long as the home is your resident, and you continue to maintain the covenant, basically paying the taxes and insurance, it stays there. That's paid through a single premium, which is calculated as, it's not really paid until the end when the home is sold, but the premium for the private mortgage insurance is 2% of the appraised value. So $200,000 house going to be $4,000. Again, that doesn't come out of their pocket, but it's real money. Next part of the closing costs is an origination fee, and that's how we get paid. That's how I get paid. That pays us for help to get the reverse mortgage, and that's on a sliding scale that it's capped at. It can never be more $6,000, but again that's a sliding scale. And the third part of the closing costs are all the missing stuff, the attorney's fees, title and deed registration, all of those kinds of things. And so those closing costs, the last ones that I named, they're real. They are paid at the time of the closing, but the customer never pays them off. They just remain on them until when the last person moves on, when the home is no longer the primary residence, then the reverse mortgage becomes due and payable. When the home is sold, it doesn't necessarily have to be sold. A family member could apply for a forward mortgage, which they'd have to qualify for if they wanted to buy the house. I think that's perfectly acceptable. But when the house is gone, then the proceeds of the sale, first thing, any liens, that is the mortgage balance, the cost expenses are paid, and then the excess equity, whatever is left through the sale of the home, goes in accordance in terms of the will. So I always ask people at this stage of the conversation, it goes in accordance with the terms of the will. And do you have wills and are they current? Probably 50-50. And I explain, don't misunderstand me. I don't bills. I'm not here for that purpose at all. But I do feel that it's valuable for you and the people to leave behind you if you have them. And that's the end of the pitch on wills. But the bottom line is, if they accrued a great deal of interest and it's a terrible real estate market, if the sale price of the home is not sufficient to cover the reverse mortgage balance, any deficit is covered out of the private mortgage insurance. So if there's excess equity, it goes into will. If deficit is covered by the private mortgage insurance. So the worst thing that can happen is they break even.
Well, that's good news, because I think a lot of people wonder about that. And
Absolutely.
I've spoken with children who have said, I'm concerned that we will be saddled with debt after my parents are gone. And so that is good to hear. Well, I want to thank you very much, Michael. And I want to ask you, if anyone wants more information, what is the best way to contact you?
Ideally, the email, and then my email is at the bottom of the sent to you. Or call me, but when you get busy with cell phones, it's kind of hit and miss. If that's what voicemail for. It's
Right.
rare I don't return the phone call a day. If I don't, unless I'm on vacation, I'll return it the next day. And what I do is I encourage people when I do meet with them that I really in this meeting, I'm simply a resource. I have a lot of information that may be valuable to you, and that's my job, is to share it with you so that you will be able to make the decision as to what is most appropriate for you. If it turns out that a reverse mortgage would be valuable, that's what we're here for. That's our job, is to help you, learn more about it. So when you understand it, you'll have the knowledge to make the decision if it makes sense for you. We're happy to help.
Well, that's great. It's nice to speak with someone who has the experience, and obviously your heart is in it as well. And for what we do,
yeah.
it has to be.
I enjoy it. It's a worthwhile service, and there are, and in the past, back in the 1980s, when reverse mortgages were first signed into legislation by President Reagan, the industry was totally new, was totally unregulated, and there were a lot of people taking advantage of it. The government stepped in and said, we want reverse mortgages to be available to our senior citizens, but not the way it's being done now. They instituted the requirement for the HUD counseling. Since it's the consumer contract, it's a 3-day right of rescission after closing. With these safeguards in place, it's not, you can't keep the crooks out entirely, but they shut a lot of the doors to them, and the consumer is protected as much as it's possible to do anyway.
That's great. So it's our job to educate the public to how things are now.
Absolutely.
Yeah.
And for you folks also, I want you to consider me a resource. If you have a question, just up in an email. And I'm sitting at home in my family room right now, and I have my computer and my fax machine. So I'm self-contained. And, oftentimes when I come home, I'll take my jacket off and walk downstairs and see if there's any emails. Sometimes a question that someone has sent in, and, well, that's really simple, but not to them it wasn't. So I'll just take a couple minutes and go off the. If not, the first thing that I do when I get to the office in the morning is catch up on my emails.
Okay. Well, thank you very much for your time and the information. My
pleasure. Look forward to seeing you again.
Absolutely. And happy holidays.
And to you too.
Thank you. Bye-bye.
So long.